Hey guys, welcome back to our channel CA Minds Easy CA Coaching. Today we are going to learn about journal entries and how they are recorded in the journal books. So, before jumping into the chapter, let us understand the modern classification of accounts. Real, nominal and personal accounts, the traditional classification of accounts. Well, the thing to understand is when an asset account is given, you have to debit it. When liabilities account is given, you have to credit it, and when a capital account is present, you have to credit it. Okay, when there's a increase in the value of asset, then you have to debit it. When there's an increase in the liabilities account, you have to credit it. When there's an increase in capital account, you have to credit it again. What happens in the reverse case? You have to do you have to credit asset account, debit liabilities account, debit capital account. Same happens with other accounts. Okay then, let us know what is journal. A journal is a book where all the transactions made by us are entered to show which accounts are debited and credited. A journal is a subsidiary book. Recording of transactions in journal is termed as journalizing the entries. It is the book of original entry. Original entry means the transactions entered by us which are originally written in the journal books. Okay, let us learn about the journalizing process. They are basically of two types: general journal, specialized journal. And this format is very important while recording the journal entries. Date, particulars, LF, debit and credit amount. Then, what are the golden rules to record these journal entries? The first rule is debit the receiver and credit the giver in the case of nominal accounts. Note it down again. Debit the receiver, credit the giver. Well, let us take an example to understand this golden rule. See, for example, a person named Anirudh has purchased sorry. A person named Anirudh asked Krishna to give him some amount of 10,000. So, who is the receiver of this amount? Anirudh. Who is the giver of the amount? Krishna. So, the journal entry will be Anirudh account debited to Krishna account. Well, this is the explanation for first golden rule. Let us revise that again. The golden rule for personal accounts is debit the receiver and credit the giver. Well, the second rule is for nominal accounts, where the golden rule is debit all expenses credit all gains. Okay then, let us take an example. Well, I have some employees and of around 10 members, and I gave them a salary of 30,000 rupees. So the journal entry will be salaries account debited to bank account. Since salary is an expense, it is debited. A salary is expense for us, so it is debited, and we are the giver, so our bank account is credited. Okay. Then what is the entry when, okay then, in nominal account, when we have some gains, they have to be credited. So let us take an example. When we receive some interest from the bank, then the entry will be bank account debited to interest account. Okay then what is the golden rule for real account? A real account is like it is used mostly for assets such as building, plant and machinery, etc. The golden rule is what comes in is to be debited and what goes out is to be credited. Let us take an example. When a person purchases a machinery, then the entry will be machinery account debtor to bank account. This is the entry since machinery account is coming in as in a form of capital, and our money is going out, so the bank account is credited. So these are the golden rules of accounting which have to be used while recording journal entries in the journal books. Hope you like my video guys. Like, share and subscribe.